Welcome back to the Daily Crypto Deep Dive. And today we're getting into something that is confusing a lot of people right now, but if you understand it properly, it gives you a serious edge over most of the market. Because over the last few days, with everything going on around Iran, oil prices moving, markets reacting, you've probably noticed something strange. One day crypto is being called a safe haven. The next day, it's being called a risk asset again. One day, Bitcoin is holding strong while markets fall. The next day, everything drops together. And it looks like people are just changing their minds every 24 hours. But they're not. And that's the key point of this entire episode. What you're seeing is not people flipping their opinion. What you're seeing is different forces taking control of the market at different times, and then the media and analysts scrambling to explain whatever just happened. So today, we're going to break this down properly. Not just Bitcoin, the whole crypto market. What's actually driving it, why the narrative keeps changing, and most importantly, how you should be thinking about it going forward, especially if this situation escalates further. Because if you get this right, you stop reacting to headlines, and you start understanding the game. Now let's start with the backdrop, because this is important. The situation around Iran right now is not just political noise. This is one of the most important macro triggers we've had in a while. You've got rising tension, threats around key shipping routes, especially the Strait of Hormuz, and that matters because a huge percentage of the world's oil flows through that one area. So immediately, markets start pricing in disruption. Oil moves up. Inflation expectations start creeping back into the conversation, and once inflation comes back into the conversation, everything changes. Because now you've got central banks potentially staying tighter for longer, you've got liquidity staying restricted. And when liquidity is restricted, risk assets struggle. And that includes crypto. But here's where it gets interesting. At the exact same time that liquidity is tightening, geopolitical risk is rising. And when geopolitical risk rises, trust in the system starts to get questioned. Governments, currencies, financial stability, all of it comes under pressure. And when that happens, people start looking for alternatives. And that includes crypto. So you've got two forces hitting the market at the same time, pulling in opposite directions. One force is saying sell risk. The other force is saying look for protection. And crypto sits right in the middle of that. Now this is where most people get it wrong, because they talk about crypto like it's one thing. It's not. It's a basket of completely different behaviors. So let's break it down properly. First, Bitcoin. Bitcoin is the closest thing crypto has to a safe haven narrative. It's fixed supply, it's decentralized, it's not controlled by any government. So, in theory, when the world gets unstable, Bitcoin should benefit. And sometimes, it does. You'll see moments where everything else is shaky and Bitcoin holds up better than expected. But here's the reality. In the short term, Bitcoin is still heavily influenced by liquidity. It trades with institutions, with ETFs, with macro positioning. So when big money decides to de-risk, Bitcoin gets sold along with everything else. That's why you'll see it drop during market stress, even though the long-term narrative says it should be a hedge. So already you've got a split. Short-term, Bitcoin behaves like a risk asset. Long-term, it's trying to become a store of value. And until that transition is complete, you're going to get mixed signals. Now let's move to Ethereum. Ethereum is not a safe haven, and this is where people need to be clear. Ethereum is a network. It's tied to activity, usage, innovation, and growth. It benefits when people are building, when capital is flowing, when risk appetite is high. So when markets are strong, Ethereum tends to outperform. But when markets tighten, when liquidity drops, Ethereum gets hit harder. So when you hear someone say crypto is failing as a safe haven, what they're often looking at is Ethereum and the wider ecosystem, not Bitcoin specifically. And that matters, because it shows you that crypto is not unified in how it reacts. Now let's go further down the risk curve. Altcoins. Altcoins are pure risk. They are driven by liquidity, sentiment, and speculation. When markets get nervous, altcoins are the first thing to get sold. There is no safe haven narrative here. This is where capital exits, not where it hides. So if you're seeing altcoins drop sharply while Bitcoin holds up slightly better, that's not crypto failing. That's rotation within crypto itself. capital moving from high risk to lower risk within the same system. And then we've got one of the most important pieces that people overlook: stablecoins. Because stablecoins are actually where a lot of the safe haven behavior inside crypto shows up. When uncertainty rises, a lot of capital doesn't leave crypto completely. It moves into stablecoins. It stays inside the system, but reduces volatility. That's defensive positioning within crypto itself. So when you step back and look at the whole picture, what you actually have is 4 different behaviors happening at once. Bitcoin trying to act as a store of value. Ethereum acting like a growth asset. Altcoins acting like high-risk speculation. Stablecoins acting as internal safety. And all of them reacting differently to the same macro event. So when the headlines say, "Crypto is doing this," or "Crypto is doing that," it's already an oversimplification. Now let's get to the main point of this episode. Why does the narrative keep changing every day? And the answer is simple: because the dominant force in the market keeps changing. Some days, liquidity is the main driver. On those days, everything trades like a risk asset. Crypto drops, equities drop, and the narrative becomes risk-off environment. Other days, fear of the system becomes the main driver. On those days, crypto stabilizes or even rises, and suddenly it's safe haven demand. Same assets, same fundamentals, different dominant force. And here's the key. The market doesn't move because of the narrative. The narrative moves because of the market. This is something most people don't fully understand. Price moves first. Then the explanation comes after. So if Bitcoin is up, analysts will say it's acting as a hedge. If Bitcoin is down, they'll say it's behaving like a risk asset. But the underlying reality hasn't changed in that 24-hour window. Only the dominant flow has. Now let's talk about who is actually driving those flows. Because this is where it gets even clearer. When institutions are in control, crypto behaves like a risk asset. Because institutions treat it that way. They allocate to Bitcoin as part of a broader portfolio. They compare it to tech stocks, to growth assets. And when they need to reduce exposure, they sell it. So during periods of uncertainty, institutional flow pushes crypto down. But when crypto native capital or retail sentiment takes over, the behavior changes. Because that group sees crypto differently. They see it as an alternative system. They believe in the long-term narrative. So during moments of fear, instead of selling, they may hold or even buy. And that's when you start to see resilience. So again, it's not that people are changing their minds. It's that different groups are in control at different times. Now let's bring this back to where we are right now. With Iran, with oil, with inflation concerns coming back into play, we are in a mixed environment. Liquidity is tight, but system-level risk is rising. So you've got both forces active at the same time. Which is why the market looks confused. Because it is balancing 2 competing realities. And that's why the narrative keeps flipping. Now here's the part that actually matters for you. How do you use this? Because understanding this is one thing. Applying it is where the edge comes from. Instead of asking, is crypto a safe haven, you need to ask a better question. What is driving the market today? Is it liquidity? Is it fear? Is it positioning? Because whichever one is dominant will determine how crypto behaves. If liquidity is tightening, expect weakness, especially in altcoins. If fear of the system is rising, expect relative strength, particularly in Bitcoin. And if both are happening at the same time, expect volatility and mixed signals. And that's exactly where we are right now. Now let's finish with the bigger picture, because this is where the long-term story comes in. Crypto is in transition. It started as a speculative asset. It's now being integrated into institutional portfolios. And it's beginning to be considered as part of the global financial system. But it hasn't fully arrived yet. It hasn't fully earned trust as a safe haven. And it hasn't lost its speculative nature either. So what we're seeing right now is not failure. It's a transition phase. Every geopolitical event, every market shock, every period of instability, these are tests. And crypto is still being tested. Sometimes it passes, sometimes it doesn't. But over time, if it continues to hold value, if it continues to attract capital during uncertainty, that safe haven narrative will strengthen. But until then, you're going to keep seeing this. Mixed signals, conflicting narratives, and daily flip-flops in the headlines. So no, people are not changing their minds every day. The market just hasn't decided what crypto is yet. And until it does, this confusion is not going away. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.